Stocks climb on US-India trade deal hopes amid indications of India easing back on Russian oil imports. IT and financials gain even as in energy drags.
And promoters of Infosys opt out of the IT major rupees 18,000 crore buyback in a signal of confidence, even as Trump-Modi call and clarification on US H-1B visa norms boost sentiments for Indian technology sector.
An over 1,600 crore order from the Army for close-quarter carbines lifts the Bharat Forge stock. The carbines will replace the old Sterling rifles as part of the Army's modernization effort.
Crude spikes after US imposes sanctions on Russian oil majors Rosneft and Lukoil, while gold steadies after a big drop early in this week. Silver too sells off on profit-taking.
Hindustan Unilever delivers on expectations with sales and operating profit in line with analyst estimates, even as volumes remain flat. The FMCG leader, however, expects GST reforms to boost consumption growth. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a fabulous Diwali and start to the New Year's. 26,000 currently for the Nifty, no complaints coming in. We have the Midcap index, which is up around 0.5% at this point in time, and the Bank Nifty, which is up over 520 odd points at this point. We do have IT, which is really leading from the front today in terms of the sector. So the Nifty IT index itself is up around 3 odd percent at this point in time. We have all of the stocks such as Infosys, HCL Tech, all of them leading from the front. So great going in terms of a lot of the IT stocks. The India-US hopes of a possible trade deal has really fired up a couple of these stocks from the broader markets as well. So Gokuldas Exports, for example, is up around 7 odd percent. Avanti Feeds is up around 4 odd percent in today's trading session, giving you a sense in terms of what kind of market we have on our hands. Just want to bring up the PSU Bank Index as well, because while we are talking about the IT index, etc., the Nifty PSU Bank Index is up around 0.8% in today's trading session. It matters because it's gained around 3.5 odd percent this week itself. So great going for the markets, great going for certain sectors.
Hi, Ekta. Good afternoon. Great going for the markets, great going for certain sectors. Today, actually, all sectors are trading in the green. So there's no complaining there at all. And FMCG, keep an eye on that one as well. Nifty FMCG is among the top sectoral gainers. After IT, it is FMCG. We have Varun Beverages, Marico, which is managing to hold on to gains. Colgate, that will be reporting numbers. HUL, that reported its numbers. So all these stocks surely are in focus. And other than that, keep an eye out on these textile names. They are buzzing away in trade. Vardhaman Textile, KPR Mill, Trident, among some of the names that are buzzing in today's trading session. But we have Vivek to take us through more stocks which are buzzing around in trade, reasons behind that as well. Vivek, good afternoon and over to you.
Well, good afternoon. A green screen, we were threatening to go ahead and hit lifetime high levels, just shy of that. But despite that, very, very strong start as far as Samvat 2082 is concerned. Now, the IT names, like you mentioned, doing very well. Number one, hopes of a trade deal, some anxiety regards to very high costs for H-1B visa renewable is something too that has ebbed away. On the back of that, all of the IT names, look at Infosys up almost 5% along with the individual news flow over there as well. The entire PSU banking pack, remember, it's been rallying quite significantly, especially in the last two trading weeks. Today, it's seen another set of up move. Look at Bank of India higher by almost 5%. Q2 results, two recent listings came out of the results over the past two sessions. Jain Resources as well as EPAC Freepag. That particular name is Jain Resources. It's a recent listing that's doing quite well for itself in the session today. Bharat Forge, large order win coming in from the Indian Army, plus, some amount of positive news flow and hopes of a trade deal is something that is keeping a lot of the auto ancillaries too quite abuzz in the session today. And a whole host of exporters, not focusing on any particular sector, but have a look at Vivo Global, Vardhaman Textile, Avanti Feeds, all of these names, Wellspun Living for that matter, doing very well in the session today on very good volumes. On the other hand, well, the only sector you could call under a bit of weather today is the entire oil and gas space. OMCs all of them worries of refining margin hit. On the back of that, down anywhere between 1 to 3%. Have a look at Dixon Technologies, follow through selling scene after the company cut its guidance. Godfrey Phillips, this particular name on strong volumes today among the top laggards on the NSE 500. And Muthoot Fin, gold prices have cooled off from the recent peak, seen as a proxy play to that particular space. Muthoot Fin cools off from the day's high spend, almost 5% lower for Muthoot Fin today.
Okay, all right, Vivek, thanks very much for that. So a lot of stocks which are buzzing in today's trading session, and couple, especially the oil and gas space, which is a bit subdued. But the market has risen on the India-US trade optimism. In fact, the Nifty's crossed 26,000 for the first time in 2025. We have Devang Mehta, who's the Deputy MD and CIO Equity NDPMS Spark Private Wealth Management, who's joining in now to discuss the markets with us. Devang, hi, welcome to the show. Well, I don't know where to start. Should we start by talking about consumption? Should we start by talking about the India-US trade deal? Just give us a sense in terms of, where you are at, say, when it comes to specific stocks within the consumption space, considering that we've just left behind the festive season and it's been fairly good. Give us a sense in terms of what you're making of it.
Thanks, Ekta, for having me on the show. Belated Diwali and prosperous New Year wishes to you and the entire team and all the viewers. The fireworks continue. So I think that's what we can call the market right now. What we are seeing the last 5-6 days, and I think it's a pent-up demand of sort of buying businesses on the back of a great, festive spirit in terms of what we have seen. I think very clearly, I would go down to micro sectors and sectors, but wouldn't talk stocks as recommendations, but I'll give a lot of examples. Very clearly, Ekta, what we have seen is the last 15-20 days, I think post 22nd September, when the GST, sort of the new GST transformation set in, we have seen a flurry of demand, right from two-wheelers, right from four-wheelers, and I would not like to repeat what we have read in the last 2-3 days, right? Around 6 lakh crores of sales is what we thought about, and around 70,000 crores of services, and around 5.5 lakh crores of goods. Yes, this also will have the small traders, but finally, if the small traders and even the unorganized sectors of the economy do well, I think this all will come towards more of consumption and more of capex and more of financialization. So my sense that this looks structural. What government has done over the last 1 year, last budget, yes, they left something in the hands of consumer. Second, I think what has happened to inflation, what has happened to interest rates, historically lower sort of inflation we are seeing at a 100-month low. That also encourages a lot of people where interest rates are now moving downwards to spend more. And third, yes, of course, the GST rationalization. And this seems very, very structural. Yes, and the festival sales, we have seen a super buoyant demand across categories, right from non-discretionary to even discretionary consumption and even the luxury items. But my sense that if the India-US trade deal, which has been an overhang since a long time, if that materializes, I think we have also seen the return of FIIs. If I am not making a very exaggerated point, but last 4-5 days, we have seen a bit of a good behavior from their side as well. So I think all this confluence of factors, the macros, some bit of micros, I think earnings would also start coming back in the next quarter, if not in this quarter. My sense that we have more things to cheer, more positives than negatives, and more sort of reward rather than risk.
Okay, more sort of rewards rather than risks, and FII surely at least some bit of a buying. Seems like, the sell that was going on for a while, that seems to be a story that's now changing. Devang, good afternoon. This is Vinny joining in the conversation as well. I just want to understand in terms of, you spoke about the auto sector, right? The PV. That's where we saw good sales, festive season sales. SUVs were the ones which were doing well, last through the years or last couple of years is what we could say. But are these small car sales, has that seen an improvement? What is your understanding? And obviously then, does that merit those companies doing much better?
What I have seen, and I've been always making this point since last couple of years, that how India has transformed itself. What used to be a luxury earlier has now become necessity, and that is what premiumization is all about. The sense one gets here is that Maruti was on record last couple of years talking about selling more SUVs, the more Vitara Brezzas of the world, rather than more of your entry-level Altos and stuff. But I think what the GST rationalization has also done, and this happens more more in tier 2, tier 3 cities and even smaller towns and even rural India, which has probably also seen prosperity because of decent monsoon, because of decent farm income growth. My sense is that across the strata of the curve, from necessity to luxury, there has been sales across. What I read, and of course these numbers will reflect in the quarterly numbers in the next quarter, but whatever you read from FADA or from the vehicles, from the dealers, is that yes, this time the demand has been uniform. It's been across, right from hatchback to even sedans. SUVs, of course, have not benefited much because of the GST, but there also the demand has been very resilient. So as I said, it's a combination of factors. It's not only GST, but also I think India has seen a tremendous spirit in terms of festive demand, the pent-up demand, whatever you say. The last 6-8 months, the last 2 years have not been great for automobile sector. So particularly PVs and also some bit of two-wheeler demand is where we are seeing a lot of traction. And I think this seems like it can probably stay for the next 1 year, 2 years. I'm not talking 5 years, but the next 1 or 2 years, I think this probably demand. It will not be as exaggerated as what it is during the festival season, but probably it seems like a structural story coming back to the fore.
Okay, all right. Devang, wanted your sense in terms of what's taking place with the entire IT sector now. Would you be a buyer in a couple of these stocks with regards to Infosys? Infosys has, the buyback news, but separately, a lot of these IT stocks seem to be in favor because of the H1B clarifications which have come through.
I think the only problem here is that the sector is now sort of in news for a variety of reasons. One, most of these companies, typically the large cap IT companies, were just, I think, few days back at 52-week close. Yes, there has been a lot of narrative around what President Trump does a tweet about this type of companies. Yes, the H1B row, the numbers probably growing at single digits, mid-single digits. Most of these companies don't have the wherewithal to probably grow in double digits for a long, long time to come. Yes, things can change. Most of these companies are also getting to the digitization wave or are also investing in other streams or AI, if I could put it that way. That would potentially take some time. My sense that somebody who probably wants that 10-12% type of returns, the FD plus type of returns, this sector seems a little more undervalued, if I can use that word. But somebody who is growth centric or wants a sort of 14, 15, 18% type of returns CAGR over the next 3-5 years, I don't think that this sector has the sort of tailwind for a CAGR type of return for the next 3-5 years. Yes, it can be a decent trading bet for the next 6 months, 1 year. But as I said, we sort of are completely underweight or we don't have this type of businesses in the portfolio, which have a lot of global dependence and is more led by news flow rather than concrete fundamentals.
Mm-hmm. Devang, what about the capex story, right? That was doing well in the last year. Now, given that consumption is also going to be coming back, given that there are so many measures that are already taken, do you still think the capex story remains intact in terms of manufacturing, engineering, power, or only one specific part of this maybe would be doing better?
I think my sense tells me that probably India runs on 3 wheels, and I've been making this point. One has always been consumption, which took a setback over the last 4-5 years. Capex was one thing which came out. I think it had a huge hibernation period for a long, long time. But then somehow Capex came back and you saw power, engineering, manufacturing, right, capital goods, ancillaries, all such type of industries doing very well. And now consumption as well as a bit of credit growth is also seen right now. I think if consumption goes up, credit growth will also go up. And your bank balance sheets are clean, are robust. Your corporate balance sheets have also sort of cleaned up. My sense that this gives them an extra sort of a legroom to now expand. So I'm again talking about private capex, which has been long not coming. Government capex has been steady, and I think they will not stop it. If government capex and private capex both come in, my sense that you can't rule out that this capex-oriented companies will do well. My sense that most of these companies related to engineering, capital goods, infra have taken a breather. The last 2-3 months, yes, your companies related to financials, your companies related to consumption has come back. But I probably it will be a risk to ignore these sectors. And my sense that they've cooled off a little bit in terms of valuation also. Also from here on, execution speed up and new orders would start flowing. If the overall economic shape and size improves from here on, I think the biggest beneficiaries would be capex-related stocks. So my sense, you can have 3 parts in the portfolio. One is capex-related, the second is consumption-oriented, and third is financials along with credit growth-oriented.
Okay, all right, Devang, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is the view coming in from Devang Mehta on the markets. Just want to point out that there were some statements which came in from HUL where the management has indicated, yes, volume-led growth is what they're going to be focusing on, but the target margin range is between 23 to 24%. That's what the management is indicating at this point in time. We'll take a short break, but up next we'll connect with Bhavin Shah, who's the founder, CIO and CEO of Sameeksha Capital, as there are clarifications with regards to the H-1B visa, which has really boosted IT stocks today. Stay tuned for that.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is up almost 210 points. 26,070 is where the Nifty is trading at. Nifty IT up 3% in today's trading session, top sectoral gainer. Now, that's a big story of the day, given that we're seeing a rally coming in for Infosys as well. And not only that, it's not just limited to Infosys, but most of these IT companies, they are surging in trade today. Rima is here to help us understand why. Rima, over to you.
Well, a couple of reasons, but let's start with Infosys first. The promoters have said that they will not participate in the 18,000 crore buyback. Promoters hold about a 13% stake in the company. Now, when the promoters don't participate, increases the acceptance ratio for the remaining shareholders. And just as a recap, Infosys it's a tender buyback at 1,800 rupees per share, and it accounts for 2.4% of the overall equity. Now, the question is, are the promoters not participating in the buyback because they have, they're bullish on the long-term prospects? Maybe that's so. But also, is it on account of the tax considerations? Because now we know, as per the new rules which came into effect, the deemed income from dividend is treated is treated at the highest tax slab, which basically makes it inefficient for high net worth individuals, i.e. the promoters. So is that a consideration that went into the promoters saying they won't participate? But secondly, there is also a sentiment booster for the entire IT sector because of the clarification on H-1B visa. Remember, H-1B visa fee was hiked to 100,000 for new visa holders, applicants, basically. But if you are a student on F1 and you want to get an H-1B visa, it's not applicable to you. If you are on H-1B visa but you want to change your job, then it's not applicable for you. And again, it's only for the new applicants. So some clarifications have also provided some, calm in the overall season. And generally, the IT earnings season was not bad in Q2 compared to muted expectations. The Nifty IT index itself is down 16% on a year-to-date basis, and it's 21% away from its 52-week high.
Okay, all right, Rima. Thanks very much for that. So that's on the entire IT space. In fact, let's speak to Bhavin Shah, founder, CIO and CEO of Sameeksha Capital, to get his perspective on this. Bhavin, hi, welcome to the show, and season's greetings to you as well. Well, it seems to be, season's greetings definitely for the IT space today. So give us a sense, what's resulting in the up move that we're seeing today? I know Infosys is stock specific with regards to the buyback, but how much of a sentiment boost or fundamental boost is this H-1B news which has come through in the past 2 days?
Sure. Yeah, so, in fact, I just spoke about exactly a week back, when the mood was pretty gloomy on the sector. And, I presented my views on why this is a good opportunity. I think the H-1B news, it helps in the sense that it will continue to, from whatever I understood, it will continue to create, additional talent pool of H-1B visa holders in US. Those who go to US for studies, post their studies and practical training, they might be able to get H-1B. It looks like, and those who already have H-1B, should be able to continue having it. So. I think US has realized that complete block on H-1B with this $100,000, is not really productive. It's counterproductive for the US only, and it will only ship more jobs abroad. So I think in that sense, it's a positive news. I still think that given that companies will not be able to, or will have to spend $100,000 to get H-1B for the talent here, I think on margin, it is going to push more offshoring for sure. That is my view that, more and more curbs and making it more expensive to hire software programmers in US, it only helps, Indian IT story. So I think that may be a bit of a, positive sentiment wise, and overall the stocks have been down a fair bit. And I think that maybe, and some of the results haven't really delivered any negative surprises by and large. And so I think with 6%, sometimes more than 6% free cash flow yield that some of these stocks are available, and I'm talking about trailing earnings, not forward. I think it becomes a lucrative entry point for those investors who are not looking for amazing, phenomenal returns, but still respectable returns with very low risk.
Hi, Pavan. Good afternoon. This is Vinny joining in the conversation as well. So, in terms of returns, right now you said, right, companies so far in terms of earnings, it's not been bad. There's no negative surprise. But would you be looking more at large cap IT or maybe the mid cap IT? And some of these names in the mid and small cap have seen a very good run up, right? Whether you talk about Nugent Software, NetWeb Technologies, all of these small ones are quite chopped up in trade. So how do we look at both large cap and mid cap now?
So I think there are opportunities in both. I've talked about Infosys. Suddenly, very attractively placed in our view. If you are okay with say 10 to 12% return annualized on a compounded basis, I think it's a pretty good place to be. I don't think you can find any other large cap company in the Indian market that is trading at 6%, close to 6% free cash flow yield, and can deliver a high single-digit free cash flow growth for a foreseeable future. So I think that is, I think that's why it becomes, for us a clear opportunity. And then I think also in the small cap, I think last week already I spoke about Mastech. They came out with the results after that, and I think the cash flow generation has been very strong. The revenue growth I think should bounce up a little bit in the coming year. So I think that will also help. So I think, there are opportunities there. I think NetWeb is more specific to the data server build out kind of a story. And, I think it's a very different zone in that business. I think if you're looking at non-US specific kind of growth opportunities, then, I think we like companies like Reddington, which I think are also seeing some transformation in that business to some higher value added opportunities. And I've been very consistent with growth delivery. So I think there are opportunities in the sector across the board.
Bhavin, you own Infosys.
Yes.
Are you tendering in the buyback?
I think it's an interesting question. I think we will probably tender given the very big delta in the price. And since you asked me this question, my suggestion to Indian companies who are doing this buyback is to not do any buyback, but simply invest excess cash in an index fund. And make a very clear-cut policy about that, because the Indian government has been very unfavorable to companies in terms of returning cash to shareholders, either through dividends or buyback. Both are very unattractive options, and that is not very good for actually the equity markets because it creates lack of an incentive, in fact, reverse incentive for companies to do buyback and hold cash. So I think instead of simply holding cash in in this treasury low yield assets, why not just buy index fund and hold it as long as the tax situation in India remains unfavorable? Maybe someday in some future, some government will wake up and realize this is not right and they fix it, and then you start giving cash back.
Okay. Just wanted to circle back, Bhavin, with regards to this entire IT discussion. Meta is letting go of its AI employees, a certain section of 600, I think, of their AI employees. What kind of signal is that, giving to the Indian IT companies or investors when it comes to Indian IT, that maybe the AI trade is sort of unwinding a little bit?
I think, first of all, impact of AI in software development field is very strong, very clear. There is significant boost in productivity, and that's one of the reasons why I think more work will get done with fewer people. There is no question about it, and that's why it is a deflationary. I think that is well accepted. I don't think there is any cause for any debate there. However, it also means that software will be written faster. So there will be more interesting problems that will be solved with software, And I think for that, the work will have to be done. And I think the focus for Indian IT company has to be to train their workforce to be able to use these AI tools very effectively, which is where I clearly, I've noticed with every technology transition, Indian companies tend to play a bit of a quick follower as opposed to leader. Like, for example, Accenture is a leader in this aspect, and Indian companies need to play quick catch up. But I think ultimately the impact of AI on that aspect is that yes, it is reducing work in a short run, but over time it should help also in terms of because of more opportunities that come up. As far as what Meta is trying to do, I think it's a bit of an internal reorganization. As they've hired some new leaders, who see some skills as being relevant and some not being relevant. I don't think it is a big kind of read through on the whole AI race that's going on. And we can debate separately on whether that AI race where it's going to end up. But yeah.
Absolutely. That's a conversation for another day because it's a vast topic to discuss. But Bhavin, thank you so much for joining us this afternoon, speaking with us in terms of the trends that we're watching out for as well. Thank you so much for that. But on that note, we're going to slip into a very short break. And here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens.
Welcome back. Well, the big news is that US President Donald Trump has announced fresh sanctions on Russia and hit it with additional sanctions on Russia's two biggest oil companies, that's Rosneft and Lukoil. In fact, earlier today, we did speak to Mr. M.K. Surana, who's the former CMD of HPCL, for some perspective on this. So listen in to what he had to say.
Whether these sanctions will actually put out all the Russian barrels out of the market. I don't think that will happen because China still continues to buy, and it will be difficult to implement a sanction in the past also where 100% barrels goes out the market. Assuming that this hypothesis is correct, that some barrels will continue to be in the market, and assuming that with the current fast-track rollback of the Middle East supplies or OPEC plus supplies, currently the market is oversupplied. I think in a slightly longer period, I don't think that the bearish shadow on the crude market is going away with this. And therefore, the crude oil supply should remain moderate. The price of the crude should remain moderate, and the market is well supplied. The Indian companies like Nara is concerned, they were sanctioned by European Union, but they were not sanctioned by US as such as of today. And as far as they're supplying in the domestic market, I think that may not get impacted. The question is, one thing is sanction, and second is how it gets implemented. Basically, the US sanction gets implemented when there is a dollar payment, it passes through US banks. So as far as the transaction is not in dollar, it will be difficult to implement those sanctions.
Okay, on that note, we're actually going to slip into a very short break. On the other side, Manisha Gupta will be joined by Rahul Mehta from Silver Emporium talking about commodities. Stay tuned in for that.
Welcome back, and joining us now on the show is Rahul Mehta from Silver Emporium. Rahul, hi, thank you so much for joining in. And what a volatile week this has been and continues to be like that as well. Well, to begin with, would love to understand on how silver prices stand right now. We do understand it's down 10% from its highs. Has the premium gone off? And from where we stand right now, what is the spot market working out to be?
Good morning, Manisha. The premium in the market stayed for a very, very short period. It was there for another 3 to 4 days. Currently, there is no premium as such in the market, but currently market is trading at around 1,55,000, including GST in the spot market.
What is the kind of buying that you have witnessed this Dhanteras and Diwali, as in a week?
See, during Diwali and Dhanteras the festive season was very good, and people were buying a lot of coins and bars. But we have seen the buying has been reduced in terms of number of grammage. The buying has reduced because people were expecting prices to fall, so they buy at a very small quantity. So this was a good sign because we at the end of the day we don't want investors to lose money when investing in silver.
Rahul, are you saying that it was more about medallions, as in sense of bullion that people were buying silver in? Artifacts, jewelry, did that do good as well, or not so much?
See, if you talk about specifically on Dhanteras, bars and coins did really well. Articles maybe was very limited to idols, and jewelry didn't do good as expected.
Rahul, as compared to previous year, if you had to put in a percentage in sense of how silver trading was this Dhanteras and Diwali, how would you put the maths in?
So if you were to put it in terms of volumes, the volumes were about 15 to 20% year on year, in spite of pricing being about 80% higher from the last Dhanteras.
Oh, wow. Would you be able to put that in tonnage terms as well?
Frankly speaking, to put silver into tonnage is very difficult because India is very, very scattered market and very unorganized. So to put numbers into tonnage becomes very difficult.
Rahul, come in on the premium part as well, because as people were buying around and before the Dhanteras, this is exactly the time that there was a premium in markets as well. Would you say a lot of buyers, even 50% of them actually bought silver in premium?
I won't say that because silver was not available freely in the market. So that was a good reason people could not buy silver at a higher premiums. Very, very, very small number of people who bought silver at a higher premium. That's a very good sign because if the supply was good, a lot of people would have bought silver at the higher premiums.
How are you looking at the availability right now? Is that physical shortage or crunch that markets were anticipating for last couple of weeks something that led to silver ETFs suspending their services as well? Is that kind of scenario now stabilizing a bit?
The silver market is already stabilized. Now supplies are easily available and we should expect reasonable return in 2026. In case you've spoken to any of the ETFs, is the supply getting better for them as well? Are the prices inching down now to more stable levels? I think the prices have stabilized. I think the supply across India is steadily available right now. So the prices will stabilize now.
Talk to us about the import numbers as well, Rahul. We do understand that 5,000 to 6,000 tons of silver is what India imports every year. Any sense on what imports are we looking at for this year until time?
I think so. By year end, we should be expecting anywhere between 7,000 to 8,000 tons of import this year.
Oh, you're anticipating a higher than average number per annum?
We should be, because I think so. Last season was very good in terms of numbers and volumes are pretty good. Depends upon how the next couple of months go. But I think we should expect a higher number this year.
For the silver buying, Rahul, has it been more about self-purchase or do you think the gifting played a part as well?
See, both. I would say the investment demand was very good. I think a lot of money from equity markets moved to silver, as well as a lot of buying for festive buying was also there.
The festival buying almost being done now. It's going to be about the wedding season, which commences perhaps from today itself. How are you looking at the wedding buying when it comes to silver, and in what quantum, what shape do you see that taking place?
So I would say the wedding demand, it always depends upon in terms of number of kgs which they buy during the wedding. So I think so that trend will going to continue, and wedding demand is going to remain strong as usual. We will also see a good spike in silver jewelry demand because gold pricing being at high levels, and silver jewelry in terms of design, finish and all is as good as gold jewelry which is available in the market. And a lot of weddings have become destination weddings where people don't want to carry precious jewelry, declaring customs, go out, bring it back. So I would see a huge upside in silver jewelry also this year during the wedding demand.
Okay, all right, Manisha, thanks very much for taking us through that conversation, and Rahul as well. Well, that's the view coming in on gold as well as silver. We have stocks such as Manappuram as well as Muthoot, which are in focus on account of the gold prices, seeing a little bit of profit booking coming through. Well, we need to take a short break with the news that we have the Nifty, which is up around 230 odd points, the advance decline ratio, which is absolutely even keel at this point. Take a break and be back. Up next, we'll get you lot more in terms of the stocks in focus in our movers and shakers segment. Stay tuned. Welcome back. Just watch out for a stock such as Loris Labs, which is releasing its numbers today. That stock is just about holding with a gain of around 1% But before that, we also have the Nifty, which is at around 26,100. It's the best levels that I think we've seen in around a year, or since September of 2024. So more than a year in terms of the time that we've seen the Nifty hit 26,100. So great going for the markets, no complaints coming in. And in such a market, we do have a lot of stocks which are in focus as well. And this is our movers and shakers segment. So let's get going on that. In fact, we have Sudarshan joining in to tell us why Bharat Forge is in focus. That stock is gaining today. Sudarshan, over to you.
The stock is today seeing big buying, currently up more than 5% after company along with PLR System, that's the JV between Adani Defense and Israel's weapon industries, have bagged orders, and that order worth is almost 2,800 crore, of which 60% is going to Bharat Forge and remaining 40% will be going to PLR Systems. Now this is ordered to supply carbine, that is close quarters carbine, and it would be 4.25 lakh close quarter carbines to Indian Army, and that is expected to replace the Sterling rifles, and it will start in September of 2026. So on the back of this big order win, you are seeing that Bharat Forge is currently up more than 5%.
Absolutely. On the back of this order win, 5% gain. Thanks for that, Sudarshan. But let's move on and talk about a stock that's not doing so well today. That's NMDC. And this is after a company has cut iron ore prices. Nigel is here to give us more details on this front. Nigel, over to you.
Well, that's right. NMDC has gone ahead and they've cut their lumps as well as fines prices by around 500 to around 550 rupees on a per ton basis. Remember, the street was bracing for this sort of a cut. However, the quantum is larger than what was expected. So the street was working with roughly around 200 to around 300 rupees per ton in terms of a price cut. However, 500 to around 550 rupees, that's a negative surprise. I had spoken to JSW Steel a few days ago, and they had suggested that they're expecting prices to soften as well. So it works in their favor. However, for NMDC, the strategy seems to be they're going for volumes now. And that's why they've reduced pricing by such a large extent. Keep in mind, a miner like Lloyd Metal is going to be going ahead and supplying higher amount of iron ore into the market because they've got permissions to ramp up capacity substantially. So for the time being, it appears NMDC, they've cut prices, which the street has viewed negatively because it's larger than expected, but they're going for volumes, and that seems to be the focus as of now. Back to you.
Okay, all right. Thanks very much for that. Sudarshan, back to you. You're looking at United Breweries. It's in focus on the back of Heineken India's Q3 update.
So Heineken India has given Q3 updates in which it has mentioned that India organic net revenue has grown in mid-single digit and company continues to focus on premiumization, while beer volume has fallen basically due to monsoon, and premium brands like Kingfisher Ultra Max, which has seen a healthy growth. And its Ultra Max and Amstel Grand drove low-teen volume growth for this segment. Now for United Breweries going forward, would be focused on the margin profile. How does company do on the margin front after the price hike that it has taken in several states? Now the focus would be on the earnings once United Breweries come out with its earnings for Q2.
Okay, Sudarshan, thank you so much for the update coming in for United Breweries as well. But on that note, we're going to actually slip into a very short break. Don't go anywhere. We'll talk more about the markets on the other side. Welcome back to Halftime Report on CNBC-TV18. Nifty did go up to that day's high level today, 26,090 around that mark. Then it came off a few points from there, but still trading around those levels. Keep an eye out on that. 26,070, 200 points uptick for the Nifty 50. IT continues to be the top gainer. Apart from that, I beg your pardon, is the Nifty Bank as well. That is doing good in today's trading session. FMCG, because of HUL's numbers. Colgate will also be reporting their numbers. Keep an eye out on that. But with that, it's an end to this edition of Halftime Report on CNBC-TV18. Thank you so much for tuning in. Up next to Business Lunch.